What's going on? My name is Hamilton with the Trading Initiative, and I'm creating a quick video here on Apple. I got a question about it, and I feel like this is just good content for everybody. So here's exactly why TTI is looking to go long Apple and how we're looking to do it. We originally played a 157 break right here up towards 170. A couple of the guys in TTI held the entire position. Very good profit. But post 170, we waited for the all-time high. Right here was about no man's land. We didn't want anything to do with it. On the actual Apple event day, we saw an all-time high, and we immediately started discussing, listen, this is the strongest sector year to date, tech. This is a top 3 strong industry on the year, software. This is arguably the most important stock in the stock market. We need to be going long Apple at all-time highs. We would be doing TTI a disservice if we're not looking to go long. The strongest sector, top 3 strongest industry, and arguably the most important stock at all-time highs, we'd be doing ourselves a disservice. This is how we're playing it. These contracts right here, first off, go ahead and break it down. We're targeting the $200 area. So if we were actually looking at the 195, but law of nice big round numbers, if you have gone through any of the CMT material, chartered market technician, there's this phenomenon. Statisticians don't understand exactly why, but for whatever reason, numbers in the market tend to gravitate towards those big, nice, round numbers. Traders love to trade around those. And so our original price target was 195 based off of the September 195 call contracts. We said, listen, if we're at 195, odds of this thing essentially pressing up into the 200 just out of pure stupidness, out of the fact that it's 200, it's probably pretty high. So we said, let's just go for those 200s. There's really no reason why. If we're at 195, there's a good shot we're probably going to test 200 before the market decides to reject it and dump on everybody. So that's the original idea, the $200 call in September. Here's how we are actually getting along this name, though. We decided not to get long on the day of the event for obvious reasons. It's nearly always a buy the rumor, sell the news. And that's exactly what we got. Those $200 calls in September, right before the sell-off, we're going for $3.50. Near end of day, they were going for $1.70. That is a dramatic decrease in premium. We were getting essentially a 50% discount just by waiting for the end of day. The guys that bought this all-time high might have been targeting the $200 price target as well, but now they are holding an uncomfortable position where they usually get dumped on. So we said, let's wait and try to snipe these $200 calls at the 175 area. You can see I drew this cute little black line. That's a previous area of resistance that matches up with high volume node on that VRVP. We expected Apple to pull back in towards that 175 area, leave those guys that bought those contracts on the day of the Apple event out to dry. We usually say, they're taking them out into the deep end and they're drowning them. These guys can't wait to get out of their positions because they're crushed. And as of right now, these contracts got down to about $1.35. I mean, this is like a 70% drawdown on the same trade idea. And so what did we do today? We started entering into this play. I am not fully positioned. Actually, I have no position in Apple right now. I am still waiting for the 175 test. We'll see if we get it. We did start taking contracts in the $1.35 range to like 150. So we got at the very minimum a 50% discount on the exact same trade idea. And the actual stops here, I mean, super easy. Look at the risk to reward here. We're playing the 175 volume shelf as resistance now turns support. We break below 175. We want out of these back in the middle of the range, somewhere near the 172.50 area, and we're targeting 200. This is a massive 8.37 risk to reward trade. I mean, it's absolutely massive. Those contracts that we're getting for 50 to 75% off are going to be absolutely bonkers if we get up anywhere near 200 by September, which we fully expect is going to happen. I didn't run through the full TTI process because if you've been following the content, you know about the RSI, you know about the volume, you understand everything that we're looking at. But this is a unique way for us to get long an all-time high stock that we want to get long at, but at a cheaper price point. It's very important to understand, though. This is the exact same trade idea as the guy that got in on the Apple event. They're targeting the 200s and they're probably risking around 172. The problem is by buying in the 180 to 185 area, these contracts are going to be down 90% by the time you stop out. Most of the time, these guys are just going to let these go to zero. We're going to get a refund, right? We're going to get a rebate. We might sell at 50% loss or a 40% loss. We're going to get 60% back. On top of that, we're getting them for 60, 70% off, meaning the entire dollar amount that we are risking on the trade is so much less. That's why the risk to reward is so skewed in our favor. So once again, we're waiting for the pullback to 175 to get fully positioned, but some guys got in today on those $200 contracts for anywhere between $1.35 to $1.50. We're targeting the $200 area in September, and we're cutting at the 1.725. Any questions? Feel free to leave comments, and I'll check you in the next one.